Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to another new episode of Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and analyze them using the technical charts, learn something from that, and then plan for a better trade for the upcoming week that's starting tomorrow, June 5th, 2023. Let's get into the charts. Here we have the Nifty charts on the left side, Banknifty on the right side. Both are weekly charts, and you can see that it's a red candle, but it's a close flat. It is a close that's flattish. Banknifty also, it's a red candle that you're seeing in a close that's flat, and also it's a bear trap, trapping the bulls closing below the previous candle's high. So it was kind of a pullback, considering the fact that the Banknifty had made a new all-time high by hitting very close to 40,500, nearby that was 498 or something. So that was kind of a trap, real trap. So it's a small pullback if you consider the fact that the markets had rallied 11 to 15% in the bottom indices. And we also know that we are in the top. And daily charts, how does it say? So this shows a clear 5 days of pullback after a gap up on Monday, right? So Monday trapped, Monday actually tried us, and then completely trapped again when it fell down from there after the adjustments are made, right? So that's how markets behave, surprising everyone. And if you also did the same, it gapped up on a Monday and then pulled back completely by trapping the bulls closing those candles, previous week candles. So you can also see that it's at a support zone. It's close to the 20 moving average also. In fact, Banknifty is very close to that and bouncing from there almost. So it's a change of priority bounce probability that can be seen from the daily chart. So that's how the markets behave on the daily charts. Another view is talking about this rounding pattern, and Banknifty almost had made a new all-time high by trying to go above that rounding pattern towards the breakout. But if he has some more to go, it's a resistance zone. This previous swing highs to be taken out before it gets in the breakout zone. So it's a very crucial zone, and that the Nifty is going. But at the same time, it's about that flag pattern that you can clearly see in here. Right? Flag pattern, by the way, it's on the weekly charts. It takes time, but if that flag pattern has believed, markets can go up to 19,500 or above for sure. Right, if the flag pattern works also, it seems to be breakout. The flag stop is where the breakout zone is, and it's already happened, and it's going to be a crucial resistance or rounding pattern or breakout zones. That's what you can clearly see that. Right. Bollinger Bands from the daily time frames is showing clearly that the upside is still there in the Nifty. The expansion of the upside is there, and it indicates further upwards. While Banknifty is showing some contraction, and you can see that the bend has taken place. And also the daily charts, you can see that, I missed to say that, both these daily charts are inside bars inside the bears. So some consolidation is what in the short term charts are talking about. And the bands, as I said, Banknifty shows some consolidation, but Nifty is yet to show the consolidation or sideways one. So Banknifty expect to consolidate or move sideways or not make much moves at this point, but both of them have the supports downside, and Banknifty is in fact bounced from that moving average, 20 exponential moving average. And both of them, as per the Bollinger Bands, are indicating that it's having bullish bias, also consolidations in the night. That's because it's still about close above the 20 moving average, which is the median of the Bollinger Bands. Now, in order to analyze the support and resistance levels, look at this chart. So you can see that the first resistance on the upside would be 18,600 zones, previous swing highs, and after that you have 18,700 zones, 18,696 to be precise. So the previous swing highs, and after that you have the all-time highs at near to 18,900. Supports, the first support would be the 20 moving average expression. So before that you have support zone at 18,500. And if that is gone, then you have the moving average supports at 18,340 levels, right? And this is a daily chart you see. Then 18,300, and 338, the 20 exponential moving average. So 18,300 is going to be a very good support zone, is what you can understand. After that, you have 18,200 supports, then 18,068, 18,000 rounding number, 18,060, and that's how it goes to the exponential move, which is coming near to 17,680. So upsides, resistance we have seen, and that's how it goes. Banknifty, if you see, the first resistance would be for the previous swing high to be taken out once again. That comes close to the 44,151 levels, and then after that 44,350 would be a zone of resistance, and then 44,498 the previous swing high, which is all-time high. So 44,500 resistance after that, 41,150, 44,350, and then 44,500. So the resistance on the upside. Downside, the first support with the moving average 43,700 supports, and then you have 43,600 supports, and then 43,367, 43,000 rounding numbered supports. 43,860 is the 50 moving average, exponential moving average, and then 42,000 would be budget high, previous budget high, and also 100 moving average, exponential moving average supports. That's what Banknifty supports and resistance are showing. So let's try to study the momentum and the trend indicators on the Banknifty, in the weekly on the left side and daily on the right side. So what you see here is that momentum is intact on the weekly. There's no issues there, but momentum has slipped to the sideways in the case of Banknifty, and Nifty is still holding it, although there is a dip that has happened. So in a nutshell, Nifty has a bullish momentum that is maintained, no doubt about that, at both time frames. Banknifty has slipped to the sideways, but it's having a rising momentum. That momentum for the medium term remains to the bullish, but having a small fall in the momentum. Right, so overall, Nifty is showing some momentum dip. Trend indicators, Nifty maintains the bullish momentum, although short term it's falling and medium term it's rising. Banknifty has fallen to the bearish zones on DMI negative. Right? So that's something that shows that the trend ADX trend indicators, what the trend has gone to the DMI negative zones for Banknifty. Momentum also has slipped. So we are talking about short term. So short term strength of trend and momentum has trouble for Banknifty, but Nifty remains bullish. And the medium term for both remains to the positive zones, bullish zones on both the indices. Right? That's what it indicates. Moving on, studying the volatility in the opportunity analysis, the VIX has cooled off 6.5%. Remember, overall the week wise, it's a flat close and almost bearish close, but the VIX has cooled off. That's contrary to, it's a divergence that you can see there. Right? Normally, when the market is falling down, VIX is supposed to rise up, but it's cooled off. So that can be indication that this pullback is the mild one, and markets continue to rally. Is what you can indicate. Right now, the VIX is seen at 11.12, still the low volatility regime. But there is one more question that last time it had fallen below the 11 levels. The VIX had a sharp reversal that happened. Keep that in mind. Right? Which is once again coming to the below 11 kind of levels. In fact, it's fallen down there and then climbed and closed above the 11. So whenever it goes below the 11, there is a trouble that the reversals can be very sharp, because it can't go further below the 10. Right? 10.5 is the lowest that we have seen nearby. Even the 11 below has also only happened very rarely in the historic, only a few years in the entire 20 years history. So some reversals from that side is possible. You have to be aware about that in the talk about the volatility index, the fear and greed. But as of now, the VIX seems to be low, and I said the volatility regime below the 15, and then fear and greed is less. Is what the charts are indicating, or data is indicating. Now, if you study the opportunity analysis for the Nifty, it's a long build-up that has happened surprisingly for both the indices on Friday. The futures opportunities that we are talking about. The options for the expiry of June 8th, 2023, weekly expiry, we see that 0.74 and 0.73, it's not bullish, but it's closer to bullish than the bearish. That's what PCR. So PCR, the put call ratio of option writing for the next weekly expiry is not giving a clear picture of its bullish or bearish. Although it's closer to bullishness is what it gives, right? But futures wise, as I said, it's clear indicating a bullish build-up that has happened on Friday. That's what open interest analysis. So look at this. There's a wide range between the highest and the second highest call writing zones. That in indices is clearly seen by the option writers. Look at this Nifty. The highest writing is seen. Second, it's 43,000 and 44,000 is where the second highest support and call resistances are seen, and 44,000 straddle, or the option writers are seeing writing calls and puts at the same zone as 44. So 44,000 is going to be very crucial, right? Retrieving and maintaining close above that is going to be very crucial next week for the Banknifty. But for the Nifty, 18,500 and 19,500, it's a very wide range that you can see there. Right, that's again indecisiveness, right? Very wide range. So the option writers have no clues whether the market is going to break out to 90,000 or is it going to fall down to 18,000, or is it going to consolidate. So there's no clues. So 18,500 is the highest put writing, and 19,500 is where the highest call writing is seen. Second highest put writing is seen as 18,600, and the second highest call writing also seems to be there. That means option writers are seeing that it's a bullish outlook overall. If you see, right, 18,500, and maintaining 18,500 is going to be crucial on the Nifty as per the option writers, and that as indicates for the June 8th Thursday 2023 week's expiry, right? That's what analysis and volatility analysis is all about. So low wicks and bullish build up on, or closer to bullish build-up is what you see on the open interest data analysis. Moving on, trying to understand the different sectors. It's also positive here because you can see that it's all negative close only on the IT sector. That too flattish 0.12 only lost. Rest is all up, right? Markets also had a flat close and it's all up 0.32% up on metal. That's a small up move. But auto sector, look at this, 1.8, pharma 2.4, FMCG 1.75, reality 4% nearby. So that's a cross sector up move is happening. Now only the IT sector is slightly flat because of some reason, but that's across the sector up move is what you're seeing. The most bullish is auto, FMCG and reality, and metal and pharma and IT are all having bullishness in one of the time frames, and it's trying to catch some of the medium time frames as well. So that's what it can be seen in the charts as well. These are the charts of the indices of the different sectors. And Nifty IT is in a consolidation, and it's an upswing from the previous low that is made with momentum in the sideways and trying to rise up. Metal also in the sideways and rising up. Medium charts we're talking about, and it's a breakout, and auto on the medium charts, breaking out of consolidation zone. And even the pharma is also trying to get into the bullish zone by breaking out of that trend line. FMCG is definitely one of the most bullish sectors, similar to the auto and reality. It's also breaking out from the consolidation. Momentum is right in the all-time high levels. Reality also is breaking out and off the parallel channel. It's moving up, taking on solid bullish move is happening. These three sectors of auto, FMCG, and the reality, and are catching up to get in the bullish zone. So across the sector moves are very much evident. But look at this stocks that contribute maximum to the index. HDFC is having trouble on its dip, although there is a flag and pole pattern that is there. It seems to be having big trouble getting out of the all-time high levels, and it's consolidating, and in fact it's falling in the sideways. Lions also faces some red resistance, momentum resistance as well as price resistance can be clearly seen. Family trade been trying to move after hitting the neckline of the breakout zone, and then it's consolidating since 2021 September. It's going up, down, up, down. That's what is happening in Reliance. So consolidation sideways, falling is what you can see for Reliance. So the heavyweight, all the three heavyweights that you see here, that contribute maximum is having trouble. Now, of course, another trouble zone is where the IT is just trying to move up the back, and as it's close to the gap, you can see that the Nifty is having trouble. As it reaches the top of the trend line, TCS also is facing trouble, both on the sideways. So what's performing? None of these major sectors are performing last week. All of them facing resistance. So this is something to be cautious about. Right? So the sell-off, if at all, whoever is doing it's happening in the heavyweight stocks, and the price market is held up by buying that's happening in other stocks other than the major sectors. So look at this ICS and it's having bullish momentum. Only Kritik, the most contributing stocks, the only one that's having bullish momentum is these two, ICICI and Konak Bank. Konak Bank, Inward Hammer facing resistance falling down. ICICI Bank facing the heat of resistance at the all-time high nearby zones. But momentum is more of this ICICI and Konak. Only two stocks are holding the markets. Last week's, other than these two stocks, all have done bad. All of you see, none of these heavyweight stocks are in good shape. They're all at the brim of resistance, which is something that you have to be cautious about. We had how the institution supports net buying is what you can see for this week also. So previous 4 weeks actually, not 2. It's probably 4 weeks or more than that, right? So more than a month, the Fyers has been continuously buying. Right, and so it's last week 6,500 crores of buying has happened there, and here's a net sellers of just 1,000 crores in last week. Net longs on the derivative for the FIDs also has moved on last week, but the interesting fact is just its FIs have sold only 2 days. Highest selling has happened on Friday. So in the June 1 and 2 they have sold. So on the FIs done with the buying after the May. Are they getting into the opposite side of selling once again? That's a concern. But as of now, week to week is closer. If you see FS bias for another week, and that's positive. That's holding the markets up. So as soon as that stops, we have some. We had global markets, currencies, and commodities is what we're trying to analyze. Look at the currencies. You can see the dollar has cooled off 0.20% down, and it's after a correction of 14%, and now 104 is what dollar index is seeing. So that seems to be a pause in the way of upside. So this is the chart that you can see on the dollar index. It's a cup and handle breakout. It had broken out after the handle is formed, and then now there is some pause. That's all that happened. But US-dollar currency pair once again went to the top of the ascending wedge, all-time high nearby zones, and then hit the resistance, and then it's fallen down 0.2% this week, 82.37. So it's basically remaining the sideways and hope it doesn't come to the bullish zones and break out of the 83.5 high above. But weak rupee is what overall you can see, and a small pause in the breakout of the dollar. Crude oil is further down, 1.4% down. It's having a hammer. It's still a relief, sideways, 71.91. Gold is also moved up. Not ready to fall down that easy. It had another third attempt of trying to cross the all-time high. So 3-time resistance in the last 2 years, 1 year, 2 years actually. Three times that didn't fail, but it's still on the top, and it has fallen to the sideways from the bullish zones, but still strong. We got global markets. If you see, it's three indices that we're seeing: Dow Jones on the left side, and it's the Nasdaq on the top, and S&P 500. And you can see a green close in the indices. Clear bullishness is seen in the Nasdaq and the S&P 500, but Dow Jones still trying to have trouble to get into the bullish zones on the medium-term charts, but clear bullish candles, and once again getting on the top of that breakout zone. But the breakout is already seems to be happening on the descending wedge pattern on both the other indices of Nasdaq and S&P 500. Right. So it's a green US market. That's 2% up on Dow Jones, nearly 2% again up on S&P 500, and 1.5% up on the Nasdaq. So that seems to be an attempt to break out from this, resistance, and then start to move up is what you can see, which is good because US market is the global mother market of our markets as well. So that's it. That's analysis. We have 2 actionable stock picks for the next week. One is Tata Communication. You can see a rounding pattern, head and shoulder, inverter head and shoulder, a trend line, parallel channel, all that. There is good volumes also, rising momentum and rising trend. Then good risk reward. If the entry above this neckline of the rounding pattern. If your price moves to that, buy and then hold on with a tight stop loss below that big candle that happened last week. So Tata Communication weekly charts, what are you seeing? Rising momentum trend, volumes, and price pattern of rounding. It looks like it can easily give 1580 targets. Right, reasonable risk reward, more than 2. Titan is an inverted head and shoulder breakout. Seems to have confirmed with a green close above that neckline. With that neckline as a stop loss, of that candle with the neckline as a stop loss, you can have a good risk reward trade up to the height of this shoulder part. You can move up to that, so you can trail it after 33.200 levels. Good volumes, bullish momentum, it's a range shift also after prices moved from sideways and settled down on the RSI 40 and then bounced. It's very bullish actually. Titan is very bullish. It's median charts that you see. Right? Titan long and Tata Communication also long. Both are Tata Group companies, but different sectors. Right? So to stock picks, keep a watch on that. It's a swing trade opportunities. Can go up to 2-3 weeks max. Another actionable is the Nifty options weekly trading strategies. Double diagonal color spread. You can see we are selling 350 put and selling 18750 put, which is giving a very good range of 18300 to 18800. Right? It's less likely to reach for next week. And the hedge pushes are for the upcoming week, the far week. That's 15 June, 18100 and 18950 puts, giving a good range. Reasonable probability of profit and then reasonable risk reward as long as you are getting out at 1 or 2% before the expiry day. And a very wide range. That's the beauty of this. And the strategy of double diagonal color spread always is back up positive and then the VIX is at a very low levels. If it is spiking up, it will be advantageous where the decay of the 4 week would not happen that much and it will benefit overall. And adjustment also can be done on both sides if it's getting breached, but it's a very wide range. It's less likely to be breached as long as big moves are not coming. So that's a Nifty weekly strategy. Now, wrapping up all that, what happened exactly was the market has retraced back slightly and it trapped the bulls, especially in the Banknifty. And this all happened while we are having an ongoing rally of 11 to 15% both in the axis, right? And we're still very close to the rounding pattern as you have seen, and it's a crucial breakout zone is what we are, and we're holding on above the breakout zone, above the trend lines and moving averages, right? So momentum in the trend bullishness, Bollinger Bands expanding upside, all that is happening in 50 is very still helpful, although all these three are not seen on Banknifty. If I has a net buying mode across the sector bullish movies, what you are seeing, industrial sectors we're talking about, and the probability of the change will already bounce considering the support levels of the price is at and both indices. Below also the regime of the VIX and the US market showing green. These are all reasons enough to have a market view of mild bullish for the next week. But keep in mind that Banknifty did hit an all-time high and then later lost the momentum if the profit making or something, and the trend also is falling to the sideways on the short term, and that trapped the bulls as well last week, and there is a short-term bearishness that is what indicated of the charts on the weekly candles and short-term charts are consolidating with a close at less than 44,000 is a concern. Apart from that, the inside are candles that is formed in daily charts on both indices, a narrowing ascending wedge that we can see. A wedge on narrowing can fall down and break out and then reverse is what sometimes happens, and resistances, and it's a crucial neckline zone. Always resistance could be there to pull back down. Profit booking can come in. Rounding pattern, current pattern is a place where it may go for another rounding pattern where it may not happen. The breakout may be a fake out. All these possibilities are there. These are all factors and still in favor of the bears. Keep that in mind. Global cues, Russian fears, hikes, orbit, and all these worries are still there to some extent, and certainly still there. All the VIX is not reflecting that. Things could get escalated, especially when the VIX is at a very low level. Sharp reversals can come in anytime. So that's cautious. Crude oil is okay, but the weak rupee is negating that. Right? Now the levels for the next week is 18,300, 18,800, and 43,300 and 44,500 for the Banknifty. For the medium term, it's 650 lower swing low and 36,800 on the Banknifty. And the upside 18,400, 18,500 and 44,000 if that is kept intact, then we would have a big rally that can go take the Banknifty to the all-time highs in Banknifty much ahead of that, up even up to 45, 46 kind of up moves can be expected. No, that's a wrap up. That's exactly what happened. The view remains mild bullish now. As I always say, if you're playing the options and derivative segments, make sure that your risk management is all that it is all about. Even if it is not derivatives, risk management is all derivatives and options instrument. If you're playing, have hedge versions, go for non-directional strategies or particular spreads or even color spreads, where you have defined risk and your capital is intact. And portion size slightly, which is breaking out and moving about 20 or 15. And cut short and upsize your portion size and manage your risk and then control your risk is all that is in your hand, right? So that is the game. And always you can use option strategies for having SIP mode, secured cash secured puts and then covered puts and all that will give regular rental income. So that's another way of investing, right? Using the option strategy. So that's my view. Mild bullish. We continue for the next week. Market is at a crucial zone. Market is in a rally. Banks are showing some weakness, some momentum dips, but that could be a small pause before breakout is what it looks like as of now. So play safe in protect capital and then keep learning. And if you're not subscribed and if you're watching this, please subscribe and share with your friends. We have very few subscriptions and I appreciate the help in this work. And also if you like the content and if it has given some clarity for your analysis of the next week, consider the like button and share to friends and colleagues. Put in your comments and feedback to help us improve. Also, if you want to avail the Telegram services, you can click on the link that's given in the description. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.